Welcome back, everybody, to another episode of Built to Grow. And we have another episode of a two-part series with Matt Lewis, a good friend that he is a risk advisor and a agribusiness practice lead at JG Parker and Associates. And so appreciative to have you back, Matt.
Yeah, happy to be here again, Mason.
So last episode, we dove in quite a bit, and I loved where the conversation went because we kind of cut ourselves short in regards to all the risk management plans, like all the ideas were just kind of flooded, right? Like they were coming to the table. But we talked a lot about how agribusiness enterprises should be considering, risk management and how they should go about. It's not just about, basically doing an annual renewal of insurance policy and that's your risk management, strategy. That there's more to it in regards to making sure that you actually have some planning. And we talked about, hey, how can you even begin this planning? That sometimes planning feels so daunting for some people that, wow, you have a multitude of many other objectives to accomplish, including trying to hit sales targets, and trying to hit bottom line targets. That do you really have time to consider all that planning? We kind of broke down like, what are just the easy steps to make this happen, right? Let's dive in though, that at the end of the day, Matt, you are a risk and an insurance expert in the agribusiness space, right? You know what you've seen a lot with what companies have faced and, what they're going through and different claims. And you and your team have been through a lot. And so, um, we could talk about different policies here or different, risk areas in regards to, employees and workers best practice and, workers comp type of claims. We could talk about employer liabilities outside of just, employee getting hurt, employer liabilities in regards to how employers are handling themselves. We could talk about physical property. We could talk about, farmland, et cetera. I think what I'd be interested to hear from you is, what do you see as some of those prominent risks that are happening in the industry that really need to be considered and thought through well in regards to an insurance policy design and underwriting? That what are some of the risks that you've seen most agribusinesses like? Yeah, it's clear like these are the real killers out there.
Yeah, the one that immediately comes to mind, Mason, is one that is a daunting topic for everybody in California. And agribusiness, I think, is unfortunately just one of the industries that is targeted most by lawyers in this situation. And that is the EPLI type claims, right? The employer liability type claims, harassment, right? It can be wage discrimination, age discrimination, gender discrimination, you name it. But in ag specifically, the most common issue is when we have a scenario where something is wrong on a paycheck and that turns into a class action loss, right? And in any one of those circumstances, the problem, and I feel for businesses, this is something I was talking with another insurance professional about recently, where if there is a few topics that we could go to Sacramento and have a conversation with the Department of Insurance Commissioner's team, this one would probably be at the top of the list. And the reason for that, Mason, is in California, there is no coverage for a particular area known as wage and hour, right? Wage and hour claims are prevalent. They are, I would almost go so far to call it a disease in this industry, right? And because of California's business nature and their insurance nature, the way they do things, right, wrong, or otherwise, in California, there are no insurance policies out there except for a very particular type that is typically not economical for a business. But these claims, wage and hour claims, policies are only giving them coverage for defense costs. And typically it's a sublimit of $50,000 or $100,000, maybe $250,000. But that's only for defense, Mason. That doesn't give a business coverage for the actual lawsuit at hand and the amount that your business is going to have to settle for to pay out because of this class action suit due to a few very, very minor, what most people with, realistic expectations would consider an error on a paycheck that led to a situation like this. So, sadly, we've seen it happen to businesses with 40 employees. We've seen it happen to businesses with 400 employees, and it's a real problem. And there's a lot of carriers out there that have, I think, gone the extra mile by assigning better adjusters, right? So that they are more prepared to dispute these incidents. But sadly, in today's insurance climate, there is no getting out of them. Your business is going to pay. It's a matter of how much are you going to be able to negotiate it down. But unfortunately, these policies are not providing the proper coverage for that type of loss. The best thing we can do is put up a good fight and reduce that number. But there are not carriers out there providing this wage and hour coverage these days, and it's a real problem.
So, given, even policies just cover defense costs, which, I mean, just background for most of the audience, this is my perspective. There's no defense.
Right.
Against these types of claims, you're going to hire a lawyer. And we've worked with many clients through these with multiple different employment attorneys. And every single one of them has said the same exact thing: you're going to settle. And our objective is to come out with a decent settlement amount, that because what on the plaintiff side, they're going to anchor just a ridiculous amount. And um so far, time has shown that, at least, from my experience, this isn't legal advice, but just from experience, they're going to go anchor for the stupidest little claim. And I'm in Texas now, so I left political correctness behind, Matt. But they're for the stupidest, smallest little claim of a wage and hour violation, which may not even really be your fault as employer. Like, somebody may have taken advantage that, hey, I'm supposed to have a certain, lunch break, and they came back 2 minutes earlier on their own. And, oh, but there
Mhm.
wasn't all the compliance measures that told me that I couldn't come back, or that somebody was making sure that I didn't come back, and I properly took my break. And now you have a claim on your hands. And I mean, we've seen amounts going for $2 million, right? Like a claim amount of $2 million. Now, we've regularly seen those are anchors, very far out anchors, that then they're brought back, and, okay, you end up paying and settling out for 500 grand or so. But the actual defense of this, you're not going to go through a multi-year, lawsuit or anything. That the defense costs, while they're relevant, like you said, we're not talking about this big jury process or anything. It's Most attorneys would even tell you, yeah, settle. And so they're going to put a little bit of work in, to, ultimately try to reduce the size of the claim you're going to pay out of the settlement amount. But at the end of the day, defense costs, they're such a small fraction of what you're actually going to pay out. And you are probably going to have to settle. And so, I guess, kind of question, or your thought to it, is trying to even to cover the defense costs, like, for what it's worth. Is it worth it? Given all considerations?
I think sadly there's few and far between where it's going to actually work out in the way that is ideal for our client, right? For the insured. To your point, these lawsuits are just structured in such a way that make it so difficult for the insured to come out in a favorable manner, right? They really, really do. Now, yes, I mean the defense costs are there, right? But to your point, it is literally the blip on the radar in the grand scheme of things as it relates to this incident. And that's the problem. That's where, like I said, we as an industry, as insurance advisors, this would be at the top of the list when we go have a meeting with the Department of Insurance in California to figure out there's got to be a better way to protect a business. And unfortunately, it's of course driven by the attorneys, right? It's a real problem.
This is something pretty California specific. At the same time, I tell, anybody that what's happening in California is what's been happening in Europe for years, and it's just a matter of it finally comes full circle to other states at some point, right? Um, but um, you've talked about a very particular instance of wage and hour claims and the risk associated with that. At the end of the day, though, there's a lot of other potential employee, risk that can be insured. And so, kind of walk us through, because what I want to hone in on is, and we could probably spend, the episode doing this, but like, what policies should be considered in regards to that employment risk? You got workers' comp, and a lot of people don't fully understand some of these policies. They just know that, it feels like I'm mandated to go buy these things, right? But like, what is actually covered here? And so, I'm kind of interested, you know, given the other risk inherent in operating an agribusiness, what policies should, our clients be considering, our audience should be considering? And can you give a little background on those policies? Like, what are they? What do they really cover?
Yeah, I mean, if we're talking specific to employer risk, right, there's not a whole lot of other policies out there specific to this type of risk, right? You've already addressed the workers' comp. Of course, everybody has to have that. That unfortunately doesn't do anybody any good in this particular instance that we were talking about. So it's really a matter of just having the best EPLI coverage, as we refer to it, right? Employer's liability insurance, and it is to protect the business due to all of these different types of discrimination and these incidents. But again, this conversation, unfortunately, Mason, won't go real far because outside of California, it's very different, right? But it's a matter of having the appropriate coverage for the business based off of limit, right? So it's having that conversation. So the EPLI policy is definitely number one, specific to this type of incident, right?
Outside of this incident, can you, for our audience, can you kind of dive in a little bit more into an EPLI policy? Because we've walked into some clients that they don't have that, and I think it's really relevant. So can you kind of walk into that a little bit more?
Absolutely. The most common issue is when someone is terminated, right? If you terminate an employee's presence with your company, right? You fire them for wrongful cause, okay? You have a legitimate reason to fire that employee. Sadly, there's a lot of people out there that talk, and so's cousin or so and so's neighbor heard that their buddy got paid out because they went and filed a lawsuit against the business, right? They can very easily go find any of these attorneys that are happy to jump on a case like this, and they're going to claim discrimination due to age, discrimination due to gender, discrimination due to ethnicity, right? They're going to find a discrimination point to drive a wedge on and file a lawsuit against the business. And their ultimate goal is to go get 10 other people from your business that all say the same thing, right? So it's really protecting the business in a situation where although you have done all the right things and you had rightful reason to terminate that employee, they're coming back with the illegitimate lawsuit, right? Your general liability insurance does not protect you in that circumstance, right? So the EPLI policy is a must in order to protect the business from that type of loss.
I guess the question is, right, like, how do you assess how much coverage you need with that? Because it just feels like, my gosh, like what could come and hit us in some of these discrimination claims? Like I said, sometimes you don't always hear the final settlement amount. You might hear news in regards to like this was the original lawsuit amount, and those are huge anchors, right? Like any plaintiff's attorney is going to throw out the biggest number that, I mean, is not, they quote unquote reasonable, make it seem reasonable, but they're going to throw out the farthest number that they can, realize it's going to reel back a bit. But like, how does a business even assess how much coverage they should have in this area?
There's no perfect formula out there, unfortunately. It's kind of like how a business determines how much umbrella insurance to carry. There's not a perfect formula out there. There's not a calculator out there that you can plug in assets, liabilities, employee count, payroll, et cetera, to come up with a number, right? So it's really what I tell customers on various types of coverages. If you lay your head down at night on the pillow to go to sleep, and you're thinking about this particular type of incident, how much coverage do you want to have before you're writing a check out of your own bank account, right? That I think is a very good starting point. With most businesses, $1 million to $5 million for EPLI policy is very much adequate, right? I'd say that it's really for this particular coverage type, Mason, right? You're talking employee count, you're talking payroll. The other thing to really consider too is turnover, right? Are you a seasonal operation or are you a year round, 24/7, 365-day business that is 250 employees from January 1 to December 31? Or are you 25 employees January 1, 400 employees August 1, and 25 employees December 31, right? Those variables are going to come into play and have an impact on this particular type of coverage.
So we've talked about EPLI, and you've identified that, at least, and it's true. I mean, it's funny because now that I'm in Texas, and for our audience, I'm one of those Exodus numbers that came out 3-4 years ago out to Texas, right? Proudly say that, but at the same
Yeah,
point,
you gotta rub it in, don't
yeah,
you?
yeah. It's funny because even I sit with, clients in other states, and I even have to recognize, whoa, 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 like this is the California in me coming out that like literally, the aspect of, fire an employee in Texas, et cetera. Like, yes, there's absolute still risk, but like it's a completely different risk profile of how quick the attorneys are going to come after you and the likelihood of their success, right? And So you've identified definitely, you're seeing a lot of this employment risk, and this is true of all agribusinesses, regardless of what state you're in. But California is definitely dominant in this, and that I would say generally on the West Coast too. And for anybody that's listening, I'm a big believer that I did my MBA in Spain. Literally, you see the trends of Europe. California is following the trends. California, New York happen to be kind of the leaders in regards to progressive movements, and the rest of the states generally begin to follow that. Even if you look at our politics today, the concept of some of the social things that are on the table that we even consider amongst even more conservative parties, like 10 years ago, that would have not even been a consideration, right? So, like, regardless of what we think, like progressively, things feel like they're shifting. At least that's my personal opinion. At the same time, Matt, you've talked about, employee, or employer, risk is big because of this. What would you say is the other, if there's a major risk area and the policy related to it that just like, man, whether it's a transportation logistics business, whether it's a cold storage, whether, it's a grower, whether it's a dairy operation, that man, I just wish people understood more about this and honed in and focused more of their time and attention on this.
Yeah, there's really two other topics that come to mind, Mason. It's your business auto insurance, and as a direct result of that, your umbrella insurance and how much you carry in your umbrella insurance. That would be number one, because it doesn't matter if you have 5 trucks or 50 trucks on the road, right? When you have a business owned vehicle and an employee driving that vehicle on the roadway, you are automatically a bigger target for someone who you just got into a fender bender with, or it's a catastrophic loss accident. God forbid someone passes away. As soon as someone puts two and two together and it's a business owned vehicle, an employee, they think that business has got more money in the bank account than they able to do it. They're going to go hire an attorney and they're going to come sue the business, right? That would be number one. And we can get into the weeds on that. And number two would be workers' comp, right? Workers' comp is a big issue no matter what state we're in, no matter what industry we're in, right? And there's only so much a business can do. And unfortunately, there is a big issue out there, again, sadly, driven by legal counsel, right? Driven by money hungry attorneys out there taking advantage of situations where cumulative trauma claims, or otherwise known as repetitive motion claims, okay? Let's say you run a packing facility or you have a farming operation or dairy, insert industry here. There are so many different roles that these employees have that there is a repetitive motion involved, right? And someone ends up with a injury that the attorney ties into said repetitive motion or cumulative trauma type movement. That turns into a claim that otherwise would have been very minimal. Maybe it's got some physical therapy associated with it, and the employee's back to work on light duty right away with the return to work plan that gets them back to full action within a matter of weeks or months, right? Sadly, that's not the case anymore, and that's one of the primary reasons why workers' comp rates, particularly in California, but other states as well, but that is one of the reasons why the workers' comp rates are back on the rise again, because these claims are staying open longer. They're costing more money to defend. They're costing more at the doctor's facility because doctor's facility and medical facility rates are up. It's this awful ripple effect, and there's a root cause to everything, right, Mason? And when it comes to insurance rates, oftentimes it's being driven by the attorneys involved in situations being taken advantage of and becoming bigger than they should be. So I guess I would throw it back to you and say, which one do we want to get in the weeds on, or both, right? I mean, I think the two are really significant issues for all industries, regardless of size.
Let's go down the workers' comp path a little bit. That because, like you said, I mean, and auto insurance is the same. That if you drive a vehicle on the road, both of these are mandated, right? So you have to buy these policies now. Um, Walk me through, because I'm not necessarily a workers' comp expert. Because at least with the auto policy, you have ranges, right? Like you do have to have a minimum coverage, but you can certainly buy additional coverage. I'm not familiar with the same concept with workers' comp. Like, can you actually buy additional coverage amounts that, given the circumstances, what you talked about?
No, actually, it's a great question. It's just a standard, right? It's a 1 million per occurrence workers' comp limit. That is the standard, right? Everybody has umbrella insurance. It's going to sit over the top of the various underlying liability, auto, et cetera, coverages, right? But particularly with workers' comp, it's different than some where there's no little endorsements that you plug and play to provide, larger limits for a cumulative trauma claim or a larger limit for a death involved claim. It just doesn't work that way. So it's really, really important that these businesses place their workers' comp with the workers' comp carrier, the insurance company, right? That A understands their industry and the incidents that can occur as a result of their day to day operations. But what is becoming increasingly more important is having that company align with being able to proactively mitigate after an injury occurs. The second that someone suspects that that claim is going to become a litigated claim, right? Regardless of if it's legitimate or not, because there are a lot of carriers out there that have full on fraud departments internally because they know how big of a problem it is, right? And they don't want to have to increase their rates back to the customer. But if they have 5 out of 10 claims go to litigation, where 5 years ago, 10 years ago, that wasn't the case, maybe it was two, right? So having a carrier in place, Mason, that understands your operations and that is going to fight on your behalf to prove that it's fraudulent or prove that it's bogus, right? That is what is going to have a long-term impact on that insured's rates as they progress, right? Because if someone has a claim that occurs, Mason, and it's a legitimate injury, okay? Legitimate injury, long-time employee, great employee based off of, the relationship they've had. They want to get back to work. Sometimes there's even medical facilities out there, Mason, that are taking advantage of these situations to rack up their bill, right? Well, a good carrier and a good broker that's keeping, minding the ship, if you will, making sure things like that don't happen and asking questions when it seems like a claim is staying open too long. Or, hey, why does that medical facility need to see that employee again? They just saw him 3 weeks ago and everything checked out fine. Why are they going back for more PT? Right. So it's not a matter of having more limit, Mason. It's a matter of having the best carrier partner in place that aligns with the customer's needs and having a mitigation strategy in place that in the best case scenario, we as the broker are involved because we have our own internal team that's providing oversight of a claim, but we also have a carrier in line, right, that's in lockstep that has the same opinions typically, right, that understands and knows how to pick up on something early if it seems like it's going awry, because that's what's going to help mitigate and prevent rates going up next year and again and again and again.
I'm going to be kind of bold in some of the questions I ask, just for our audience and the value for our audience, because, um, right, like how you handle, an injury. Like I'm just even thinking it's crazy. I have 3 young girls, and they like to go to those indoor trampoline places, and I remember, um, like and just I guess this is like how you and I grew up, right? That like I busted my toe and it's my fault, right? Like I'm the one on the trampoline, for crying out loud, and
Yep.
thinking, hey, me as a middle-aged dad, like I can still do the things that I could do when I was a teenager. Um, but yeah, I mean, I hit my toe, I jammed it the wrong way, and I went up to the booth, or the concession stand. I just said, "Hey, can I just get a bag of ice to put on this thing because it's gonna bruise up?" And I just, feel like it's the best thing. I I couldn't believe it. We're talking teenage employees immediately. We need you to fill out this form. Like we need you to record that, hey, this, like, what happened exactly, all the circumstances that you left here in okay condition, et cetera, et cetera. Like, and I was like, okay, first of all, whoever's training these kids, like, top notch, good stuff here. But that reality that had I not gone up, they wouldn't have known. I could have left and, had an injury, come back, et cetera. And, yeah, how they handled that situation, me coming up and reporting it, great. But like I said, there's instances where somebody goes home, something happens. There's things that you can't necessarily control as a business. So how, you can't have the absolute perfect response to when somebody says that they're injured or something's happened. You can have a best case response, but it's not always going to be perfect. So there's just things out of control for a business here. Like they literally can't control. And there's a limit on how much coverage they have. Um, you talked about having a good insurance broker, a good carrier. And I'm just being objective to this, right, Matt? Like, just for our audience, like, at the end of the day, many agribusiness owners, they probably have a couple different insurance brokers that are vying for their business that are all telling them the same thing in regards to our service, our capabilities, all of this. And how do you make a decision as a business owner to assess, like, hey, I'm getting told that they have great service and that they'll do all this for me and that I should have this, but like, how do I actually assess this? Like, this is a new relationship. How do I actually assess this? What's your input to that?
I think there's two things really. One is referral based, right? You're in the industry, Mason. If you're looking to hire someone to take a certain responsibility off your team's plate, right? You're typically going to go to someone else in your industry and say, hey, do you work with somebody to handle this for your business? Who do you work with? Do you like them? Right. So I think that's first and foremost because you're going to get an honest opinion from that person you go ask, right? So you're not taking the broker's word, to the bank and just assuming everything they're saying is legitimate, right? You're getting an opinion from someone that you trust in your industry that has dealt with that subject matter expert that you're asking about, right? So I think that's the first thing. But I think the other thing too is again, and we talked about this in the previous episode, Mason, and it's about just making time to have the hard conversations. So as opposed to ignoring the phone call or the drop in from the broker who's looking to compete for that partnership who doesn't currently have your business. And instead of having a conversation about, well, who are your carriers and what are their rates? What makes you think you can improve on price? Have a scenario based conversation, right? Bring in that broker and say, hey, we dealt with this last year. At a high level, these are the circumstances. What would your team have done? What's their involvement? And what would your course of action have been? That I think allows for a more effective conversation, not only to find out what that broker's level of subject matter knowledge is, but also to find out A, has that broker been involved in a situation that I'm telling them about? And B, on the spot with no prep whatsoever, they had no idea that I was going to ask this question. What was their response? Right? Did they back up into a corner and kind of him and haw and dance around the question? Or do they say, you know what, Mr. and Mrs. So and so, this is what we do. This is why we do it. These are the steps in place. This is the proactive measures that we would advise that a business have in place for that scenario. And as a result, this is what we do. That I think is a better way to assess, is your current partner the right fit? Or is there something lacking? Or is there something missing that maybe is not currently being done for your business? Because to me, and look, you and I both have dealt with this for a number of years. And it's one of the things I truly love about the industry we serve, Mason, is we're working with some of the most loyal people on the planet, right? And that's a double-edged sword sometimes. I can't speak on your behalf, but I can say personally, some of my greatest partnerships I have, it took me 3 or 4 years to even get a single hello from these people, right? Let alone a legitimate seat at the table to have a true meaningful conversation. So I think having a conversation like that is scenario based and real world example, tied to your business, is far better than just telling your CFO, okay, go ahead and take a second, quote from another broker, whoever you like, right? Like, no, like set up a 30-minute meeting and tell the broker, hey, I've got 30 minutes, right? Like, we haven't looked at this in the last 4 years. We're willing to consider taking another look with another broker. This is a scenario. Tell us how you would handle it, and we'll see if there's a potential fit to move forward and have another conversation.
No, I like that especially the case study example that, like you said, live on the spot, that hey, how would you handle it? What would be your action plan? That there's no pitch there. It's literally they have to tell you because the experience will reveal itself really fast there, right? And so it's good stuff. Go ahead. You were gonna say something.
Yeah, no, I mean, it's one of those things that we as insurance professionals, we all know that insurance, number one, is not a fun and sexy topic, right? I didn't, Mason, believe it or not, I didn't grow up wanting to be an insurance professional. Can you believe that?
Maybe. I'm
So,
still wondering if after a couple of these shows, whether like people would just forgo like a dwell app that helps them sleep better instead of just listen to our stuff.
yes, right? It's not a fun topic. We know going into a meeting that the CFO, the business owner, the HR director, the director of EH&S, we know you are not looking forward to having these conversations, okay?
Very much so. Yep.
So, we find it much more effective if we talk more about your business and real life scenarios than we talk about insurance coverage. Yes, there's going to be a time for that conversation, right? But in order to this is where I was going with the topic earlier of these loyal business owners and families, right? Is you want to have a true partnership. You don't want to just have a broker or a banker, and I'm not a banker, so maybe I shouldn't speak on their behalf, right? But we're all business owners and we want to have a relationship with someone that we view as a true partner because they check the box of subject matter expertise, experience, knowing what to do and when to do it and how to do it, right? You want to know in the back of your mind that when you have to engage with that person that you chose to partner with, that you're in the right spot. If you and I go about just going with the lowest bid on every single thing that we do in our lives, right? Vehicle maintenance. I'm not going to just go with the lowest rate, right? Like, I don't want to be driving my family over the grapevine on a vacation and worrying about my car falling apart as I'm going over the grapevine and getting stranded. So it's not a fun conversation to have. I understand why a lot of businesses try to avoid it. And to the point we made in the previous episode, renewals are often on autopilot because that's the easy thing to do. But I think we have to try to make time for true dialogue and every few years engage with another professional, right? Have these conversations and truly assess because, hey, businesses change every year, right? We're not stagnant. Maybe we got larger, maybe we got smaller, maybe we picked up a different vertical within our business and we're doing something different now. Well, if you don't tell your broker about that, how are they supposed to know that you're now doing that? And they need to know that so they can better assess your insurance coverage. So, I use the term partnership a lot and it may sound like a shiny object, but again, in our industry, and Mason, I know you do a lot in construction, I think it really matters. I think it makes a big difference at the end of the day. It's a true partnership. It's not just a find the best bid and, switch to that carrier every year.
Well, thank you, Matt. That yeah, we could go down the route of many other products and many other risk areas, and maybe we should. That we'll get some feedback whether, like I said, people use this for a good sleeping material, or if they still prefer their Dwell or other apps that this really calm music. That but we'll see,
Yeah.
we'll see. But no, this was I just really appreciate being able to dive in from a practicality standpoint. That it's like you said. I mean, and even Matt, like literally you put it out there that it's not, hey, go with me. That even your clients, that at the end of the day, they're what you just said is encouraging them to talk to somebody other than you if they happen to be with you, but realizing that if you do your job well, hey, at the end of the day, they're going to stick with you. But realizing that, hey, it's good to be knowledgeable, and it's good to treat this as a serious practice, that it's not auto renewal, that risk management as a whole, that we're talking about business continuity. It's talking about all the work that you did to go get that client. Hey, you could be a grower, packer, shipper, and maybe you just got Costco as a client, and you've worked over the past 3 to 4 years to make sure that you keep their buyers happy. That you did all that work, and you and I both know that could be spoiled in a matter of minutes, hours, etc., by one single claim event that could disrupt all of your year's hard work. And the problem is too, is that depending upon the type of claim, um, your ability to go start up shop again and start a new entity or do something different, you could totally have a brand in the marketplace that nobody wants to touch any further. And so you want to be really careful. And so just making sure that you have a solid risk management approach that, and again, it's not something that you have to think about every day, the best practice we talked about in a previous episode, set some quarterly meetings on this with your key team members. But you've dove into some policies and some considerations that have been really good in this particular episode. And I think there may be room that we may need to deep dive into some additional policies in future episodes just to make sure that clients really understand what they're getting. Because I do think that there's a lot that it is auto renewal. Like it's literally, uh, this is what I got last year. Well, I'm just going to get that again this year because it's what I budgeted, and I budgeted a 10% price lift on all of this. I'm going to probably negotiate to try to see if I get less than 10%. But at the end of the day, I budgeted these policies, and it's like, when I first started a relationship with you, I think you were the first person I ever got a product recall insurance for because it was a new developing risk that like the industry was seeing, right? And so it can't be on auto renewal. Like we have to be knowledgeable about what's happening, what's going on in the industry and consider how do we make sure that this doesn't happen to us. And thank you for your insights today, brother. That just really appreciate having you on the show.
Yeah, absolutely. It's been fun and hopefully it's helpful for somebody, right? Have those hard conversations. They're not always fun, but every once in a while we got to make time for it.
Yeah. By the way, Matt doesn't just read insurance books all day. He does like to golf and likes to go camping. He's a normal person, y'all. So just making sure that he's not a robot behind the screen or anything here, right? So no, just really appreciate you, brother. Thank you for joining us on the show today.
Yeah, hey, thanks for having me, Mason.
Awesome.